Hi, everyone, and welcome to Trades of the Week with myself and no other than Keith Sullivan. Now, we are going to get into the updates of the market, Bitcoin breaking out, and of course, the stock market, what is going to happen with that. We have some amazing updates for you today. But before that, let's dive into a very important event, because on the 23rd of February, 6 p.m. UK time, Keith will be holding a Facebook Live to answer every single one of your questions. He will be there, answer them, can be anything. So take the opportunity to join the Facebook Live, and all you need to do is to join our Facebook group. So press the link somewhere around here to join it, become a part of the community, and of course, start learning how to become profitable with cryptos and stocks. So 23rd of February, 6 p.m. UK time, be there or be squared, like Keith said before. I'm not sure what that means, but it sounds cool. So now let's dive into the market and some updates about what is happening. First and foremost, let's go to our buffaloes. We are only in one. Well, we're in a couple of buffaloes still, and two actually. So we're looking at CHP here. We just keep moving the stop loss down. So it's down at 3.5%. And we might just continue to move it lower. So we have locked in some profits there, which is awesome. And next up is STC, Stewart Information Services Corporation. We're a bit in profit on this one. Stop loss now moved to break even. And then we have a couple of new ones for today. But before we get into those, I think it's important we dive into a stock market update here. What is going to happen, Keith? Will we see another fall of another 50%? The stock takes has been hammered. What is happening?
So in regards to the stock market, we are seeing a lot of volatility, more on the kind of the bearish side. And as Dennis says, we are seeing a lot of the stock companies having a really heavy hit in regards to its share price. But let's look at the overall economy. Now, in regards to the US, we were looking at one of the main pieces of news last week, which was job creation in the US. And for the first time since December 2020, they failed to meet the analyst's prediction. So that's the first time that they didn't manage to create enough jobs in which the analysts believed they would. So this is actually showing that maybe now we've hit that ceiling in regards to economy growth and recovery. So that's the first thing that we're looking at. Now, in regards to the institutions, okay, because remember, institutions are the one that run the market. They're the one that buys the assets and puts it onto their balance sheets. They're the ones that drive price up and down. Okay, so institutions are looking at four main driving forces, which could affect the market over the next few months. And as we know, it's the increase in interest rates. Okay, if interest rates increase, it means the economy slows down in its growth, so more people save and not spend. Again, it becomes a bit more expensive as well in regards to loans and debts. Then we've got increase in inflation, once again, stopping people spending into the economy. We've got these tightening of monetary policies, okay, which is meaning money may not be flowing into the institutions using the stimulus packages as hard as it was. And then we're also seeing a decrease in regards to the growth of the economy, okay? Because overall, the economy has seen now it's hit the ceiling. It's hit the peak of the recovery since the pandemic in 2020. So institutions are really looking at this. They are really analyzing, okay, what is it that they're going to do with their money now? Are they going to take it out of the equities, put it into commodities, or are they going to look as holding it as the dollar, as cash? And as you can see, the dollar had been increasing over the last few weeks. So it is being more held as dollar than it is as physical equities or commodities. So going into the market, one of the biggest areas or sectors of growth over the pandemic period was the tech companies. And we have now seen that these companies were massively, massively overvalued because this is where all the stimulus money was being pumped in to hold up the overall market. So we are now seeing that a lot of tech companies are being very hardly hit, and they are now really having drops in prices. And one of them that you may have noticed over the last week or so was Facebook, Meta. Now, if we look at Meta, we've got a 41% drop after close of yesterday's market. Now, a lot of people are panicking. What are we going to do? Let's jump out the window. No, it is time to be smart. Meta itself is a fundamentally strong company. It's one that we are looking to definitely get into. But a lot of people do ask questions on the webinar on why did Meta be hit, or why was Meta hit so hard? And one of the main reasons is it had a decrease in revenue growth, okay, for the first time, okay, in a long period. We are seeing also competition from TikTok. Okay, so a lot more of the younger generation are starting to utilize TikTok rather than Facebook itself. There was a decrease in ad revenue as well, and also a decrease in daily users in the US. So that was the first time they've seen a dip in daily users. So all of this has contributed to a drop in Facebook. Now, obviously with Facebook fundamentally strong, and we do believe that with their incorporation of the metaverse, this is still going to have a lot of room to move on the upside. So overall market update is institutions are being very skeptical on where their money is going. Tech companies are falling. So if you are an investor and you're looking for new opportunities, maybe have a look at your stronger fundamentally tech companies, okay? So the ones with the strongest fundamentals, and see, is there any companies you can get into? So for example, I got into Meta yesterday. Now, Dennis, did you get in Meta? That's a big question.
Well, I'm not sure if that is the big question. I have not so far, but I most definitely will. I think, and even though we are getting a slowdown in the economy, like Keith is saying, and even with Facebook, they're still a giant company. They're still making billions in revenue. It's not that they're going to vanish all of a sudden. And one thing you need to ask yourself is, yeah, it's down 41%, but have they lost 41% of their business? And the answer is no. The market always overreacts, but we are going to get into the VCA strategy which we're using for this. But there is one thing I want to look at before we move on to the new opportunities here, and that is the Nasdaq together with the other indices. And just want to update you here, just to let you know that we never broke the lowest point. So until we do that, we're still bullish, right? We're still believe we will have a recovery, but like Keith said, it doesn't look the best. So do make sure you only get into fundamentally strong companies. But being down 17-18% from the highs, that is a correction. We might have seen the correction already, but that is yet to be seen. The today's week will be important. Bottoms that are being created, maybe that those are messy usually. It's just not straight down, straight up, which we have been seeing here. But a good example of that is definitely the Corona lows over here. So looking at the daily, during Corona, it's always good to go back in history to have a look. But during the COVID, when that really struck and the markets fell down a lot, right? They fell down around 30% in a couple of weeks. And we see here, it's a bit messy. It goes up, down, up, down, up. You can never decide until it then changes direction. So we just need to be a bit patient here and wait to see what happens. But make sure you do follow us on Trades of the Week. If you haven't subscribed already, just to make sure you're getting the notifications, and we're going to share with you the next moves we're taking. But in terms of trading, it doesn't really matter. We are adding 3 today, and one of them is APG. And that is one I'm actually currently in a loss on this one, so let's hope it doesn't go all the way down, but the stop loss is firmly below the lows there, so you have the opportunity to get in at a lower price than I did, because I went in on this candle here when it started to go up before on the 1st of February. But that being said, you can now enter with the Buffalo strategy on the formation we have here. I do like the reversal candles we're seeing down here. And hopefully today we get a big move to the upside. Who knows? And the next one we're looking at is NWBI, or what can that be? It can be Nancy, Window, B, and India. And this one is also looking very interesting. We have some bullish candles here, bullish hammers, and some dojis, which looks awesome. So we have a nice risk reward ratio on this one. I have an order in on this one as well, and hopefully that triggers us in today. And last but by no means least, we have a downward trending opportunity as well, a pharmaceutical company, Albo, so Albireo Pharma, and looking nice, a great trend. And we always like when we're getting these expansions down here, where the lows are getting lower and the highs are getting lower as well. So looking like a very promising opportunity. But the only thing I want you to consider here is when placing the stop loss, it might be worth putting the stop loss above this high here, just because that might be an area the market will target. I, on the other hand, we are here a little bit more, I wouldn't say aggressive, but risky. We are following the strategy here with having the stop loss 1% above there, but just be aware of that area up there as well. So those are the buffaloes, and it doesn't matter which way the market goes, because we will always just follow the strategies, and that's which you will see, that's what's given us the profits as well. So now let's jump over to cryptos. And oh boy, cryptos has reversed a bit. We saw it went down, touched the 33,000 region, which is awesome. And now it's reversed higher. We have reversed up to 44,000 in a couple of days. And that's quite a big movement, around 33% up from the lows. And what we do like about this move is that we have broken this downward trend that was created. So this downward trend, the downward trending resistance, went all the way from November all the way now to the 4th of February, where the market really rallied higher. But the level we need to watch before we can move higher is this here, 44,400. We need to have a solid breakout above that before we can take any additional action on this. So, but the only thing we're doing is we're adding to our positions in the small cap. We're adding to them in the CCA, the crypto cost average strategy as well. So I think we're locked and loaded for a move up. But what's really interesting here is a couple of things. So Harmony is a cryptocurrency we have been looking at quite a bit as well, and we took a massive profits in this back in October. It's currently down around 40% from the high, so a great entry point with the small cap strategy if you're not in it. But they came out with a lot of news here, and what they have been doing is really building a lot in the background in terms of scalability and decentralization, and they have super low gas fees. And they have a platform now with huge potential for NFTs as well. So it's definitely a competitor to some of the other blockchains there as well. And Polkadot as well is also one that we are really excited about, and currently was down 70% from the high, currently down 62%. So great entry if you're not in it. But Polkadot, they are actually the blockchain that consumes the least amount of electricity. And I think that's awesome. That's definitely an argument for mass adoption, because it's a very sustainable project. And the ones that follows is Solana, Cardano, Algorand, Avalanche, and Tesos that are very energy efficient. So those are the companies and blockchains we're definitely looking at investing in as well. So there's not really much to say. We have entered another position on Cadena at 84%. So we're down quite a bit on this, right? Just fell down 84%. It doesn't look like it because it would went up so much, but it's down 84%. So that is one that we're looking at. Then we have a few other ones. Filecoin, for example. Filecoin is down a massive 86% from the high as well, which we did get in again, right? That's the strategy. Keep adding to them as they go down, depending on the strategy you are using. But this, if starting now, definitely use the small cap on this one as well. And we have some good ones, right? Cadena up a bit from the lows here. So it doesn't look like much, but up around 100% from the lows, which is great. Also crypto.com that we've been speaking about. I think we added to the positions down here. We're a bit in profit on this one already. So up around 30% on crypto.com. So we're not really adding any more new ones today, but I would look over my positions if I were you. We have RWeave, for example. It's really been consolidating now when the market's been going up. But a lot of these positions we're in, and with the ones I mentioned, it's really gone down a lot, right? So you really have a good opportunity to get into companies such as Theta or cryptos at Theta down 80% as well. And the last thing I want to mention here before we jump into the VCA is if we have a look at Bitcoin once again, we have seen around $800 million worth of Bitcoin being moved from exchanges to wallets. And that generally means that people are holding. And the long-term holders has actually increased with over 10% in the last couple of months, which means people are holding, people are buying. maybe because they're afraid of the inflation, maybe because they want to hedge against the market. And apparently I read an article, Keith, if you're holding cryptos and have that in your dating profile, you're actually more attractive on the dating market. Might be one thing to consider as well. Unfortunately, I think both you and me, Keith, were taken, but definitely something to consider if you're not. So anything to add on the crypto side of things, Keith?
So in regards to the crypto market, as Dennis says, we are seeing a recovery of Bitcoin. We do want to start seeing a trade above that 44,000 to give us the indication of something being bullish. Now, for me, when it comes to cryptocurrency, there are three main pillars that crypto follows. It's decentralization, security, and scalability. Now, no real blockchain offers all three at the minute. That's why we've got some layer 2 projects like Polkadot, like Harmony One, which can help blockchains communicate with each other and help them become more scalable. So for me, in regards to focus, I've been looking at more of these layer 2 blockchains, which can help scalability for some of the larger blockchains. Okay, so you've got obviously your Polkadot, you've got your Harmony One, you've got your Matic. There are so many out there to help bring up scalability of blockchain, because if crypto is to grow, which it is, there's going to be an increase in scalability. So more people can utilize that blockchain itself. But overall, as Dennis said, it's an accumulation time. We are seeing a recovery. So Bitcoin's pushing up. So a lot of more of the altcoins are going to push up even higher. So it's now looking at, okay, have I got all my entries into my positions? And also, can I start looking at taking some profits? Because I've really missed the mooing, Dennis. I think we need to start mooing over the next few episodes. Hopefully we get some profits to be able to do that.
Yeah, I mean, I've been practicing a lot even. So I am ready for some mooing for sure.
We're going to have a moo off.
A moo, we'll definitely have a moo off. So moving on then to the VCA section here. And like Keith said, a lot of these projects has really been taking a hit. Among them, PayPal, of course, down a massive 60% from the high. And I think it's a great time to invest. Like every single time, if you put this into perspective, we can go back here all the way to 2016 or 15. But every single time we've seen a bigger fall in the market, PayPal has recovered. It's really never been down 60% there. But now it is, right? It's a great opportunity. The same goes for Square, is another one. And I like to just look back and have a look. Okay, how much have these companies fallen in the past? And from during really the peak in 2018, 2020, we saw a massive drop of 67% in Square, and now we're down 65%. So we might be closing in on the lows there. And usually you do see a retest of the previous highs, maybe then to move higher. So that might be something we are experiencing in the tech sector. On Vail, that is Vail SA, we moved the stop loss up now to 20%. I'm very tempted here to take the profits just to be able to get that moo in, but we're not. No emotions. Same with MasterCard. We have the stop loss at 10% at the moment. Doesn't really move that much. A very large company, but an easy to 10% usually when it does go down. Then when we have a look at IPG Photonics Corporation, it's down at 47%. So we added an extra entry to this. The same goes for Pinterest or Pins, also down 60%. So we're getting into this as well. But you might see a trend here. We're in quite a few companies here, and you might see a trend like all the NASDAQ or the tech companies are moving the same direction. So you might not need to get into PayPal, Facebook, Pinterest, because they're all going to move the same. And we even have the tech company Zoom, the same, down 64%. So you see they all move the same. So you need to be diversified in this. We are having some silver miners, which is also down, but silver miners, we have some in the travel industry that's also down around 60%, but been performing better than the tech stocks in the last couple of weeks. We have someone in here as well with Vail, where we're up 20%. So it's important to have a good distribution on your investments. MasterCard in finance, really, and a lot of other areas, but plus 10% there as well. So don't just get into every single tech companies you can, because they're all going to move the same. Which is why today we are moving into two companies. Well, one at least here, which is Nike, which is not really a tech company in that sense, right? So it might be being down 19% is usually a good time to get into Nike as well. Good fundamentals, they have positive earnings, good income, good outlook for the coming 5 years as well. So being down around 20%, usually if we look in the past, I mean, we can look in Corona times, down 40%, down 20% is pretty good. And yes, we need to calculate for some more entries there as well. And the last one, Keith mentioned everything there is to know about that, but that is Facebook or Meta Inc. That is down 41%. Great time to enter, but not maybe if you're in PayPal, if you're in Zoom, and if you're in Intel or Square or Blocking, because they're all down the same amount. So anything to add there on the investment side of things, Keith?
No, so I think Dennis is 100% correct. It's all about diversification, right? You don't want to have all your eggs in one basket, because what happens if that basket has a hole, right? And I love that saying, because it's all about, if you put all your money in tech and tech goes down, you're not making no profit. There's no hedge. So this is why you want to look at tech. You want to look at financial companies, which are going to be positive for the increase in interest rates. You want to see pharmaceuticals, you want to see travel, for example. You just want to start really diversifying. So if one sector is heavily hit, like tech, at least the other sector should be given some sort of profit. But overall, I think the two companies, Facebook, Nike, very, very fundamentally strong, big blue chip companies utilized worldwide. So I think they are a secure investment, but it's not time to get emotional. You just follow the rules, you buy as that market drops. And then when it recovers, you're going to, what do they say? Reap the rewards, Dennis. So you're going to start looking at taking profits. And hopefully when you take profits, you move in your own house as well.
Yeah, because now we're feeding the cows, right? We're feeding the cows. And what are you doing? Please comment in the chat. What are you looking at? And what are you getting into? What are you getting out of? And is there anything you would like to see here? Comment below if there's anything you would like us to cover. We would love to hear from you, and especially how it's going. We're going to get into the results in just a moment here. But we don't really have anything to report here. We're up 59% on Buffalo, VSA up to 825% on the money invested. Oops, sorry, that was the wrong date. So here we go, 8th of February. And with the cryptos, we're up 1,460% or 1,460. Small caps, 4,320% on the money invested. That's very important. So with that being said, right, do make sure you comment below if there's anything you would like to see and if you're getting these results, because that's the whole reason we are doing this. And secondly, do not miss out, because the 23rd of February at 6 p.m. UK time, we do have a Facebook Live with Keith. So make sure you press the link in the description or flying around here somewhere so you can join the Facebook group and attend the Facebook Live, of course, because that's where it will be held to get an answer to all of your questions. Last but by no means least, if you are successful, if you're a client of ours, do make sure you send an email to Gabriella@investment-mastery.com so we can feature you. We would be proud to feature you as our client of the week, where you can share your results with the world and of course inspire other people to take action and take charge of their finances as well. So that being said, we hope you really enjoyed this video, and we love to bring this for you every single week. So do make sure you subscribe. Press that alarm bell as well, because then you're going to get notifications, and of course give us a thumbs up if you like the Keith's outfit today. That's absolutely deserves a thumbs up, I think, or if you're getting great results as well, and if you enjoy these videos. So with all that being said, everyone, we really hope you have a successful trading week, and we look forward to seeing you in the next trades of the week.